One man, using nothing but phone calls, was able to extract millions of dollars from everyday Americans. No hacking, no weapons, no breaking the system from the outside, just words, confidence, and a weakness inside the system itself. And today, as the Federal Reserve struggles to control inflation, economic growth is slowing, and recession fears are rising. The real question is, has the system actually become stronger, or are we watching the same patterns repeat again? In the late 1980s and early 1990s, the United States was experiencing rapid economic expansion. The stock market was booming, opportunities seemed everywhere, and more Americans than ever wanted to invest. This is where Jordan Belfort enters the story. He wasn't born into wealth. He wasn't backed by powerful institutions. He was a salesman. But he understood something most people didn't. People don't just buy stocks. They buy belief. They buy the idea of a better financial future. The U.S. financial system is built on three core elements: trust, information, and regulation. Organizations like the Securities and Exchange Commission exist to protect investors and maintain fairness. But there's one critical limitation. Regulation does not always act in real time. There is always a delay between action and response, and that gap can be exploited. Belfort co-founded a brokerage firm called Stratton Oakmont. Their focus was on low-priced stocks, often called penny stocks. Here's how the strategy worked. First, they accumulated large amounts of cheap shares. Then, they aggressively promoted those stocks through cold calls. As more investors bought in, prices began to rise, and at the peak, they sold to the outside world. This looked like normal market activity, but internally, it was driven by coordinated influence. Now here's the important part. At that time, the system was slower. But what about today? Even now, the U.S. economy is under pressure. Inflation remains above ideal levels. Economic growth has slowed. Unemployment is gradually rising. The Federal Reserve continues to maintain higher interest rates to stabilize the economy. And when uncertainty increases, people start looking for faster ways to grow their money. That's when risk increases. And historically, that's when manipulation becomes easier. This case was not just about finance. It was about human behavior. Investors were told, "This is your opportunity. This could be the next big growth stock." These messages trigger two powerful emotions: fear of missing out and the desire for quick returns. When those emotions take over, rational thinking weakens, and decisions become reactive instead of informed. Now let's connect this to the present. In 2026, we are seeing a similar environment. Higher interest rates, slower economic growth, increased market uncertainty. These conditions don't just affect markets, they affect behavior. Today, we see viral investment trends, social media-driven hype, and rapid price movements. The tools have changed, but the pattern remains the same. Eventually, regulators stepped in. Investigations began. The operations of Stratton Oakmont were shut down, and Jordan Belfort was held accountable. But the bigger impact was systemic. Stronger regulations, improved oversight, greater investor awareness. This is how financial systems evolve. Through pressure, failure, and correction. Today, the system is stronger, but it is not perfect. No financial system ever is. Markets continue to evolve. Regulations continue to adapt. But one factor remains constant: human behavior. And whenever uncertainty rises, old patterns tend to return. If someone tells you, "This investment is guaranteed," this opportunity won't come again. Pause, think, do your own research, because the biggest risk in financial markets is not volatility, it's blind trust. This was not just a story about a scam, it was a signal that financial systems can be powerful, but never perfect. And if you don't understand how the system works, you're not just investing, you may be participating in someone else's profit only. It does not promote or encourage illegal activities. Always conduct your own research before making financial decisions.